Welcome to the STR Data Lab.
Hello and welcome to the STR Data Lab. I'm Jamie Lane, Chief Economist at AirDNA, and I'm joined here today by a really fun and interesting guest. I've got James Savier here. He's the SVP at CBRE Hotels, my former employer and good friend. James, welcome to the show.
Thanks for having me, Jamie. I'm looking forward to the discussion we have. We have a lot of discussions. This is the first time we're recording one, so it'll be interesting. Hopefully we can share some insights with your audience here.
You're a fellow Atlantan, recently had a couple kids, so congratulations. And we worked together briefly, and when your team joined CBRE just before I left for AirDNA, and I still regret that we didn't get to work longer together because it feels like it was just too short of, seems like it was just a few months and during COVID at that.
That's right. And we joined April 1st of 2020 after 6 years at JLL previously in the same arena, hotel brokerage. So we crossed paths briefly, but as fate would have it, here we are again.
Yeah.
Our paths intertwine.
So the reason why, for listeners, that I reached out to James, because I felt like more and more in the short-term rental industry, we're hearing people talk about boutique hotel investment, and that it's a natural progression from short-term rentals. And coming from the hotel industry, like I see the sort of the benefits of hotel investments, but also the benefits of short-term rentals. Obviously, like I think short-term rentals is a great investment class, but and one that's emerging. But hotels has been tried and true for decades. It's gone through evolutions, and really wanted to get James on to talk about sort of the current state of boutique hotel investment, talk about sort of the benefits of hotel investment, and then what he sees as some of the challenges or pitfalls that he sees new investors have when they think about getting into hotel investment for the first time. So, James, how does all that sound?
Sounds good. Happy to make this open dialogue. So jump in with any questions. This isn't scripted, so we're making this very conversational. So I think to start, just a quick background. I worked at CBRE for 5 years now, but I've been in the hotel transaction arena for over a decade. So we've seen all kinds of transactions. We typically cover the institutional segment, but we have deals currently in our book ranging from 10 million all the way up to 300 million. So we see it all, including this boutique space that you mentioned. And I find it very fascinating because on the hotel side, this short-term rental space is quite a new space. And, we're still trying to figure out how it's impacting and interplaying, with the hotel fundamentals. So it's interesting to see that, when you look at the growth in the short-term rental space, that a lot of those investors that are scaling are looking to hotels as kind of a goal or destination. Because it's funny to me, you started with a few units and in short-term rentals, and you're like, hey, how about wouldn't it be great if all these units were in one building? And it's like, okay, well, that's actually been there. It's called a hotel. So lodging has been around for a very long time. I think short-term rentals with Airbnb and all the technology has, opened the accessibility for a lot of destinations and residences. And, hotels have been taking note for a long time. Marriott's stepped into the space with homes and villas. There's a lot of merging, but I think the root of it is, you have travelers that are increasingly valuing experiences over goods. And I think that benefits both hotels and short-term rentals. So I think it's natural to see there being an overlap in a cross section. I actually think right now is a really good time for new investors to come into the space because we're seeing a lot of good opportunities for people to purchase and acquire some of these boutique hotels and come at it with a fresh perspective that some of your short-term rental investors would have.
So maybe let's just start with, I'm using this term boutique hotel, like everyone knows what a boutique hotel is. How would you define a boutique hotel?
Yeah, boutique, I would say it's not one of your bigger core branded hotels like, a 500 room Hilton or Marriott. It's more of the independent, maybe they're unbranded, maybe it's a smaller hotel that is curated to a location or a particular service offering. So, think sub 70 rooms, sub, 50 rooms even, but it's a little bit bigger than your, roadside bed and breakfast. And, a lot of the brands have been trying to, because customers and travelers increasingly want differentiated experiences. So you're seeing a lot of the brands launch quote unquote boutique flags that are smaller and curated and more, tapping into the local elements of a location into their property. So I would say it's, somewhere in that independent, and some of it is branded as well, but generally means smaller, more curated. That would quantify it.
And then, and in general, how have you seen the sort of investment environment for hotels play out over the past few years? Do we see, and this is a time when people are getting and buying hotels, selling hotels, not a lot of transactions happening on the short-term rental side. Higher interest rates have definitely like curtailed new investment pretty significantly. There's a lot of hope that and lower interest rates ahead can sort of make the financing costs less to and really open up the market back up again. But in general, like how are you seeing the investment environment today, and who do you see like investing? Is it institutional players? Is it high net worth individuals? Is it foreign individual? Like in general, like where are you seeing the sort of appetite for investment today?
Yeah, there's a lot. We could have a whole episode on just that topic. I'll try and be brief and just give a flavor. But, generally speaking, ever since, the Fed started increasing interest rates, a lot of these transactions, and these aren't hobbyists, these are, I think in the hotel investment and, broader commercial real estate arena, it's professional sports. It's very competitive. You have people that have been doing this for a long time, both on the investment side and the operational side. You do have, private investors that are coming in, but even in that space, there's the Asian American Hotel Owners Association has been one of the biggest success stories in our industry in the U.S. A lot of that was driven by generations of immigrants coming here and, taking hotels as a launching pad for wealth creation and learning the business, but they were living and breathing that product. Like literally, they would live in the hotel and work in it. So it's a family business, on that end of the spectrum. So, what we're seeing is there's definitely appetite and desire for investors. Well, the challenge that we've faced in the last few years is the bid-ask spread, where, sellers, when there was a period of low interest rates, are holding a price in which they're willing to transact than buyers can or are willing to pay because of where debt costs have gone. So I think that has been the primary headwind. We're starting to see that converge a bit with the rate cuts that are anticipated, but also with just, a little bit of a correction and resetting of pricing on both sides, actually. And so we're seeing transaction activity.
And so just to pause you, this term bid-ask spread. So this is, and for listeners, this is, and the bid is essentially what someone would be willing to pay for the hotel. And the ask is what the seller's wanting to sell that hotel for. And when you say the bid-ask spread is sort of disconnected, is just, and the price people are willing to sell is at a totally different level than what people are willing to buy. And until those converge, and either the seller's coming down or the buyer's coming up, like no one's going to be transacting. And essentially what you're saying is you're starting to see both groups, and the buyers and willing to come up and the sellers willing to come down a little bit, which is opening up transactions a bit in the market.
Exactly. And you can even draw it on that whiteboard, but I'm glad you paused. Sometimes being a, a industry specialist, you get so caught up in, the jargon when you're talking to people that are in the arena all day, every day. But I'm glad you stopped to clarify that. But yes, I think it's a little bit of both. And the other thing is you could paint broad brushstrokes, and talk about macro trends, but every asset and every situation is unique. There might be, motivation. Like one asset that we're working on is, a high net worth individual that's looking to retire. So he has different motivations, owned an asset for multiple decades. versus that's different than a private equity firm that's looking, they're reaching the end of their time horizon and they need to pay back their investors. So that's the motivation on the sale, or there's a debt maturity. So, and then, special real estate does trade differently than, your more commoditized products. So we're seeing a lot of dislocation. It's really become the haves and the have-nots. But I think, at the, on the coin of uncertainty on the other end is usually opportunity. So I think that's where, your audience of investors who are looking to take that step, could find good value.
So you mentioned something at the start of that answer around how hotels are essentially, it's professional sports. Like it's people that this is their job around hotel investing, hotel operations. Like they've been doing it for decades. They went to school for it. Um, so many of the investors I'm talking with, um, and they've maybe had a few short-term rentals, they've maybe scaled to 5 or 10. They're feeling really comfortable, their ability to, at least hit doubles, triples, home runs in the short-term rental investment space. How do you feel about their ability to now take that step into boutique or and even general hotel investment? Is that something where, and you think that experience that they've built is going to be useful, or and what are the things that they would need to do to make sure that they're going to be successful coming into hotel investing?
Yeah, I would say, look, being on the transaction side in brokerage, you have to skew to the optimistic side of things. So I'm an optimist by nature, and then a second degree of it with my role. But I would say realistically, yes, absolutely. Short-term rental. I saw an analogy that I thought could be appropriate. It's like if you're going from managing a fleet of food trucks to owning a restaurant, you're in the same DNA of food service. I think similar truth applies to short-term rentals to hotels. To an extent, it's the physical real estate that's the product, but the service is the product too, and the operations. And I think we live in the golden age of information, and both with podcasts like the one you have, information online. You can arm yourself with the knowledge that you need to be successful. I think what I would like self-discovery, if I was an investor that was thinking about making that move, is understanding like, what is my ultimate goal here? Am I trying to build something here? Am I passionate about this space, and I really enjoy the hospitality element of it? If you have that passion, it's kind of like when we look for employees. It's hard to teach that. You could teach the nuts and bolts, the Econ 101, and you could make a hotel deal successful, and we could teach the nuts and bolts of that. But you have to decide, are you getting into it for the right reason? So I would say, to sum up, absolutely, there's great opportunities out there. It's not easy, but I think if you're going back to the Hoa story, like my family, I'm a son of immigrants from India as well. We weren't in the hotel business. I fell into the business serendipitously on the transaction side, on the real estate side. But a lot of my friends and family, if they were able to do it coming from a country barely speaking English without the internet, I think everyone now is at an advantage if they're willing to commit the time and resources to it. But you have to ask yourself, am I ready for that commitment?
So, and that's a great question for people to sort of think about, like ready to, and if they're ready to sort of make that commitment. Um, and I was hoping we could step back and maybe talk about some sort of hotel investing 101, because I think it is fundamentally like very different than short-term rental investing, and in many ways like significantly better. And I was hoping we could outline some of those ways that it sort of presents real opportunity for investors today. And maybe start with one of the sort of biggest concerns I hear from short-term rental investors is like, I could build this great portfolio of 20 short-term rentals, but at the end of the day, like no one's going to value that portfolio based on the profit that it's generating. I'm not going to get some like a great benefit that I've sort of brought these 20 properties together into a revenue profit generating enterprise. They're essentially all just going to sell based on the residential home comps. And that I don't have a great sort of exit potential of that business, either on the operation side, and I've probably built a great business around operating those 20 short-term rentals, or on the real estate side, because there's no sort of upside to that I've shown that it's a profitable business. So can you sort of just describe how, like, and briefly, how hotels are sort of valued on that way, and maybe how it differs on how an investor might go in and look at a hotel investment and how they might value it?
Yeah, absolutely. So I think, hearing, the challenges on the investment side from short-term rentals, it's interesting because, hotels is very much there's the core four property types in real estate. It's office, multifamily, retail, industrial, and hotels is kind of like we're quasi into that core four. We become a lot more institutional, but since it's an operating business, half the time, like, people don't know where to put us at these bigger institutions or shops. They're like, okay, that's the hotels group over there. But that's honestly why I loved it. I felt I came from consulting, and I fell in love with the business because of all the levers you could pull. It's come a long way from the cottage industry it was. It's become very institutional. And at the end of the day, these investors, they're buying return, they're buying outsized return. So hotels, the benefit and the risk is the nightly leases. Unlike office or industrial, they have long-term leases. You have nightly leases, which allows you to set your pricing daily, which is a benefit, especially in an inflationary environment. So investors, they view the risk. They want a risk premium for that. So hotels historically have, been a strategy to add yield to a portfolio of more, stable and lower yielding investments. I think the benefit there is, since it's become more institutionalized, since there's more information, more data, investors can now, with more specificity and more accuracy, predict, hey, if I buy this at an 8% cap rate, and then the cap rate is, your net operating income over your purchase price, I have confidence that either that's going to grow or stay stable. They usually project out those future cash flows. And it took a while to get there. There's some institutional investors that they won't invest in hotels, but it's becoming a growing part of a portfolio. And I think short-term rentals will probably follow that curve as it becomes more institutionalized. And the more that the investors can have scale, improve durability of that cash flow, eventually that will get credit, but it's going to take some time to educate investors. So I think hotels have just been more established. Investors understand them. They have advisors like us that can help communicate the opportunity and synthesize the information. Short-term rentals, eventually will get there. It's the same reason why all of the investors are pursuing it. It's providing a return, and it's a product that customers want. So I don't know. Does that answer your question, Jamie? Or
Yeah, it does. And essentially what I was trying to get to is, like, if you're and you talked about it with sort of valuing based on the cap rate of, like, if you're able to generate a certain amount of profit in that business, like, investors going to then value that profit. So if the average cap rate is maybe 10%, like, you're able to generate income of $1 million on that property, like, you're going to be able to generate and value around that in real estate of, let's say, $10 million. Like, and that's just fundamentally different than short-term rentals, where it's just no one's looking at the profit of that business. They're looking at the value of the underlying real estate based on how it's going to trade against other sort of home comps. So the ability to not drive incremental value either by driving more revenue into the property or removing expenses from the property will ultimately dictate what the value of the business is that you've sort of created.
That's right. And it does also matter who the ultimate buyer is. If it's an owner operator who's going to purchase a hotel and operate themselves, they're valuing more on the revenue because they feel like they can put in their operation. So in that situation, it's more multiple driven. But I think the biggest difference that you mentioned is, with short-term rentals, the underlying asset it's usually residential homes, right? So like investors, they understand what residential trades for. So they're gravitating towards that. There's just been a gap. And we see this too on the hotel side. There's some banks that, they don't understand the risk profile of that cash flow stream because it's not a guaranteed lease, like a multifamily rental or a residential rental that was leased. So it's proving out, and you need, some data and history to prove, the durability of that cash flow stream, which will help investors underwrite. So
Yeah.
the more time that passes, and it doesn't help that we also had a lot of volatility with the pandemic in 2020. The graphs go up and down in AirDNA. It looks like a heartbeat. Once they look more like a hockey stick up and to the right, I guarantee you investors will start to follow.
Yeah. Is that something, and you're sort of talking with different investment groups, that people are wanting more exposure, or at least some exposure or some investment potential in short-term rentals? Like, I know, what was it, Summit Hotels, like 2 or 3 years ago, invested in, I think it was Onera in Fredericksburg, Texas. Like, we see Marriott buying Postcard Hotels, which is more like outdoor sort of unique type listings. And obviously you've got Marriott Homes and Villas, which is more distribution play than actually operating any units. But and what have you seen out there of like institutional or more traditional hotel investors sort of thinking or looking at sort of short-term rental type product, if any?
Yeah, I would say there was a lot of conversation about it. Hotels are a very well-established business. So, find organic growth, it's getting harder and harder as fundamentals have started to level off a bit this year and beyond. So that people tend to, look for different avenues for growth. We saw that with some of the, product types you mentioned. We've seen glamping become very popular. We've seen RV parks, marinas, hospitality, either center or adjacent type product types. I feel like short-term rentals, there have been a few groups that have gone for, I think the biggest gap right now is scale. It's hard for an institutional investor. The work that's needed on a, $50, $100 million deal, sometimes it's the same amount of time that's needed on a $10 million deal. So for them, there's only so much, time that they have. So if they need to put out capital, they would need to do it in more scale. So I think right now that's been the biggest obstacle is, okay, have we found there's brands or concepts that have been out there, but from the real estate or operational side, is there anything of scale that we can make a bet on? We're starting to see some of it, but it's not, that's not like the first order that comes to our table when we're talking to investors. So, but that's starting to change, as people are looking for, if there's additional yield premium that it can provide and durability with that, I think it'll garner more interest for sure.
Yeah, I think one of the limitations of building scaled sort of portfolios for short-term rentals has been the lack of financing. If you're going to buy a short-term rental, there's a few different options. You can go traditional and 30-year fixed rate mortgage. You could potentially do a second home mortgage or a DSCR loan where you're the bank is looking at the income potential of that home and lending as a percent of that. I know, and I imagine the options for financing commercial real estate, in particular hotels, can be much more much more open. So can you describe just like, and if someone's making an investment in a hotel, they're developing a new hotel, what are all the options out there for people to finance a hotel investment?
Yeah, so I think that's interesting point, Jamie, because a lot of these transactions, rarely do we see someone or an investor, whether that's an individual or institution, acquire a deal all cash. That does happen at times, but most of the time these are leveraged acquisitions. And the good thing about the market now is, that's not what's holding, it's the cost of debt, not the availability of debt, that's constraining transaction flow, but debt is generally available today. We have a team that just specializes on hotel debt transactions. So they have good visibility into the market. So it's very liquid. There's a lot of, at the highest end of the cost side, you have debt funds like private equity funds that have raised capital around lodging or the thesis around lodging to get opportunistic returns. That's just going to come down to pricing, and it's mainly they're underwriting the business plan, right? What is the asset? Where is it located? Who's the sponsor? Like who's going to be the equity behind this? Because they're going to be beholden to the business plan they put forth. And I think that parallel kind of applies to short-term rental. I mean, it's easy to start with the residential side because that's well established. There's a lot of lanes that have been built to finance residential. It's probably a little bit of education that's needed to go to banks to help them understand the business potential of a short-term rental. One area that we've seen be very fruitful for more of the smaller 10 million or 15 million and below transaction is the Small Business Administration. The SBA offers SBA loans, and a lot of the hotel investors in that segment, depending on your business plan and your strategy, you can get support from a government organization to help facilitate the financing of a transaction. I don't know if short-term rental is a category that fits just yet, but that's something that I don't see that I don't see that potential being foreclosed on in the future. I think that could be an opportunity that opens up, but I think that's helped hotel investors a ton. That debt funds, traditional bank lending, there's a lot of different avenues, and it really depends on CMBS, which is securitized loan. That's another option that's readily available. Usually it's more efficient from an interest rate standpoint, a little bit more stringent on structure and covenants, but I think there's a lot of options available, and there's no shortage. It kind of goes to what we talked about earlier. There's no shortage of that capital that wants to be placed. It just wants to find, solid, stable investment. So the more you can prove that, the more likely you'll have better, options and terms on the financing side, generally.
So essentially what I heard you saying is because there's so much capital and money looking to come into the hotel space and provide debt, it's really a range of options. You come up with your business plan around what you're going to do, what you're going to invest in, how you're going to position it, what your projected revenue streams are, what your projected expenses, and you're going to find a range of potential lenders to help and finance that deal for you. And it could range from private equity investors who might require a much higher interest rate, or maybe a more traditional bank, which if they can get comfortable with your investment plan and the risks associated with it, even lower rate. But for most deals, there's a range, and there's actually professionals like at CBRE that specialize in finding the right debt for your investment opportunity. Is that right?
Exactly. And just like we talked about with the hospitality or short-term rental product itself, the service is the product, right? So that's what you're offering to the customer that's booking the room night or booking the stay. For a bank, you're the product, right? Like you are selling your track record, your business plan. I mean, especially with if the business plan's riskier, it's going to be more. There's going to be more scrutiny on like what is the sponsor's track record? Have they defaulted on projects previously? And but I think that's the beauty of where we are right now. I think there's an imbalance of capital in the debt space with opportunities that are available. So I think that benefits people that are looking for capital to fund good business plans.
That makes sense. And then, the last questions on the benefits I wanted to get into before we get into some of the sort of challenges around boutique hotel investment. And I wanted to sort of tee it up with a headline I saw this morning with the group that owns the Ace Hotels, sort of being able to sell that brand. And inherently in there is the ability to create a boutique hotel brand, to be able to scale that boutique hotel brand and then build something that someone would actually want to buy in the future. So you're creating value around the brand, where I think we've yet to really see a brand really take hold in the short-term rental space. Like the biggest example is maybe Vacasa, and their ability to scale to up over 30,000 homes, but even that, like, limited probably overall value because of lack of loyalty, lack of, and sort of direct bookings, all the things that you would expect to go around with the brand and sort of drive people back to booking with that set of properties. So can you describe to me just what you've seen across the sort of landscape of like boutique brands that and hotel groups that are able to sort of scale and the efficiencies that they can sort of build? Like, yes, there's efficiencies of getting sort of 70 rooms under one roof, but there's also efficiencies that come with multiple hotels under the same sort of brand and sort of driving people to those properties in multiple different markets.
Yeah, so I guess we can unpack that in multiple levels here, because as you know from your time in the hotel space, it's a fragmented structure, right? You have the ownership, you have the brand, and you have management. That I look at it like a Venn diagram. Sometimes that all overlaps, and you have, an independent owner that created its own brand, and they manage themselves. But more and more over time, that's drifted because the brands have adopted an asset-light approach. And so the brands are just purely the franchise, and they license out the, brand identity. You could, chances are the Marriott or Residence Inn by Marriott that you're looking at is not managed by Marriott or owned by Marriott. It's owned by a different owner, and it's probably managed by a different group as well. So there's three different parties. So it's highly fragmented. I think the short-term rental space, you know more about it than I do, but it's even more fragmented because you have the dispersion of ownership is highly fragmented. But when I think about brands and operations, I think, Vacasa seems more like it's a management and operating platform, whereas the brand itself, Airbnb or VRBO, they're the brand that's providing the distribution. So I think I look at Marriott more like an Airbnb, and maybe Vacasa is more like a Aimbridge or Davidson or, a hotel operator. So I guess to unpack your question there further, for scaling brands, Marriott and Hilton and IHG and Hyatt, they're trying to match the customer needs and demands. And, a couple of examples of brands that have, scaled well, AC, which was a European brand. Marriott acquired that, and they saw a gap in the segment of, premium select service that didn't have a ton of F&B programming, but just enough to, appeal to a select service operator that had good profitability and flow through, but didn't, cannibalize their traditional select full service brand. And they filled that gap with that brand, and it scaled very well. It was received by travelers well, by investors well. I think that's a great example. Graduate hotels that Hilton just acquired. AJ Capital Partners spent years developing a concept that was targeted specifically to collegiate campuses and finding, institutionalizing like a hotel product. And they created and curated their own brand that they recently sold to Hilton not too long ago. But they spent the time, effort, resources to develop that scale. They were very intentional about brand standards and brand identity. And they ultimately got rewarded for it because they were able to deliver that at scale. I think where it's challenging is, if you have a brand but you don't have all the capital that's needed to really grow it and invest in it, because you're competing against many other brands. Like, right, we're in the hotel space. Sometimes it's hard for us to keep up with all the different flags that are available, let alone, a traveler that's uninitiated to it. So it's very competitive. So you have to really understand who's your customer that you're going for, who's that target audience, and is it enough of are you filling a void, or are you adding to the saturation? Because if you're creating you're filling a new void, which short-term rental has done. It's filled a void for a group that I've seen a lot of the commercials where, short-term rentals are, appealing to someone that's traveling with the family, right? They're traveling with kids. I have 2 kids now, and, a trip that I take with me and my wife is different than a trip that I take with my family or my extended family. We just need more space. So I think where short-term rentals could help close the gap a little bit is a little bit more consistency with the execution and the experience. And that's where I feel like there's a gap, and maybe there's more overlap with what traditional hotel brands and operations have done, which is they provided that consistency so that customers can rely on it. And then that creates more value where you're more inclined to, let's be real, my wife's the one making the decision. So if she's happy with the experience, she's probably going to be inclined to book again. And the opposite is true too. We've had bad experiences with Airbnb, which steer us away from that because you don't want to have that experience again. So it's a very sensitive customer that, all of us are trying to, attract. So it's really understanding that customer. And, if there's a big enough market to go after, then I would say it might be worth investing in trying to scale a brand, in that space.
Yeah, and maybe that leads into my first question about sort of some of the pitfalls, and maybe that sort of starts with taking a boutique hotel and moving from a single or group of properties that essentially you're all on equal footing on Airbnb. Like people look at your reviews, there's no sort of brand associated with the property that someone's going to choose one or the other. You're all sort of treated equally. And then you sort of move over to the hotel space where it's dominated by brands. And I think 70% of hotels in the US are part of the top like 5 or 6 brands. Uh, like, do you see that as a concern for people that they're going to be able to come in and sort of drive the incremental demand to the properties that they're investing in? If you got 70 rooms, you're creating your own brand. You're now competing against Marriott, Hilton, IHG, Wyndham, Choice, like who have deep pockets to not only promote their own properties, to do SEO, and do everything to compete to drive the people to their properties, where you're coming in with one, you're competing on the OTAs, you maybe have higher fees associated with those OTAs. So like, do you think independent boutique hotels can really compete now? And will they continue to be able to compete in the future for guests?
Yeah, I think, it's hard to take a one size fits all approach to that. I think it's all going to be back to Econ 101, supply and demand in a location, in a market. If you're trying to compete, in a market where there's no barriers to entry, where you don't have any economic moats, or you have no, differentiators that you can lean on, it's going to be hard to compete. Like, let's say it's a corporate market that, you really have to understand the customer that you're going after. So if it's a corporate market that, 80% of the lodging demand is coming from, business travelers. Most of those business travelers have, rewards and loyalty programs that have incredible value, and they have a tendency to stay within those programs when they can. And you have, as a result, a lot of branded product in that market. It's going to be a little bit harder for, an independent hotel to compete. Now, if you're in a market like a Savannah or a Charleston, where it's a destination that's appealing to a broader mix of travelers, like, leisure or wedding group business, or, it's a mix. There might be some business that traveler's intention for visiting that market, might be something different than just, efficiency of going in and out, having a fitness center, free breakfast, or whatnot. In that situation, you might have a better chance to compete because you can stand out by offering, more personalized service. Use your size to your advantage. It feels like there's this spectrum. It's highly specialized. So specialization's on one end. The other end is scale. You just go for efficiency, scale, consistency, standardization. And if you're going to go for that boutique side, you need to really dial in, what is going to be your differentiator from a F&B offering, or from your service offering. we were traveling abroad and we stayed at a luxury hotel, and, they called us before the stay, and this was a good trip because this was a good case study for that type of trip because it was a vacation, not a business trip. The business trip, I mean, I don't mind having mobile check-in because I just need to get to my room, go to sleep, wake up, have a gym, coffee available. But for a personal leisure trip, I liked having the attention, the service. I needed help with my bags. We were traveling with a baby, so we needed assistance. They had, a crib. The housekeeping was super helpful. And that was valued. It was a smaller property. It was sub, 100 rooms. So they were able to deliver, that more high touch service. And I think there's going to be a place for both. Now, if it's a market that the fundamentals don't support it, it's going to be hard for you to be successful if, market performance for both short-term rentals and hotels is sub 50% because it's seasonal and cyclical. That's probably not where you should start, but the good news is you can let the data be your guide,
Yeah.
and let that help you establish, what's my playbook here.
Now, one thing I've really enjoyed in short-term rentals is that, especially with really unique properties, like they're able to drive sort of outsized average daily rates, ADRs, because they're so unique. Like people are looking to book certain type of properties, and if you're available and you fit that need, like it doesn't matter whether it's $500, $1,000, or $1,500. Like you're gonna find someone that could potentially book that property, and like you have enough unique aspects where it's not a sort of one-to-one sort of competition when people are sort of reviewing them, which in a lot of ways, like hotels can be that, right? Where each sort of room, like I can't tell the difference between a Holiday Inn, a Holiday Inn Express, or even an AC by Marriott. They all look pretty similar.
Well, on that point, just since you brought up, because it brings up the Econ 101, I know you're a economist at heart. So, I mean, that goes to elasticity of demand. And it's a great point to note because in this year, like, if you look at CoStar and Smith Travel Research data, the luxury performance is bucked the trend relative to the different segments because the customer that's going to stay at a Ritz-Carlton or a Four Seasons, they're less price sensitive because they're looking for a specific experience. Price is kind of a little bit more of an afterthought versus, your more price conscious traveler. So understanding, your traveler, what your product is, how you're positioned and positioning relative to their options. Yeah, you're right. I mean, on the higher end or the more unique, experiential, service-driven offerings, people pay a premium for that. It's and that premium is more resilient than you would think. We see there's quite a gap from the top performing assets to some of the more commoditized product. Yeah.
And in a lot of ways, like to have that sort of differentiated offering, it's because of those other things you can offer in the property, right? Which can be really hard for short-term rentals, even with Airbnb's new launch of services. Like, hey, it's not, just because you can have someone come in and give a massage, it's not like having a spa on property. So the ability to have F&B, like highly curated restaurant experiences, be able to host events like weddings on the property, be able to charge a resort fee for the pool, the golf course, access to all these things and the spa, things like that, presents maybe a really unique offering or opportunity. But with it also comes a lot of fixed costs associated with running it. And one of the things I was always surprised at working at CBRE and working with our colleague, Robert Mandelbaum, was how many of those offerings actually lost money. Like, yeah, like, and it feels like when I do room service at a hotel, like it's way overpriced. And then I look at the offering, it's like, yeah, well, most hotels aren't actually earning and covering the cost of room service on there. But it's like, it feels like something they have to have at a certain level. And that comes with it and a certain amount of cost associated with it. So in general, do you see those offerings and the ability to offer that stuff as a big benefit, or is it a potential sort of weight on the business, like, and that's sort of expected with a more traditional resort hotel?
Yeah, I think this is why, we've seen a proliferation of the select service hotels because F&B between, food and beverage offerings, between the food cost and the labor cost, it's hard to maintain margin there. And, we talked about brands, as you establish brand standards where, your guests are expecting to have in-room dining or, free breakfast. Now you can't pivot away from that because you've educated an entire customer base that, hey, our brand offers this, like Embassy Suites, the evening receptions or breakfast. Some people will pay a premium for that, but it comes at a cost. So I think the beauty of it is, you're going to try and offer the things that you can, maintain margin on. Like the B and F and B is more profitable. The beverage is, if you can, what AC has done well is, breakfast, has a nice, bar amenities. Some of these have rooftop bars. So you have the ability to focus more on that higher margin type business without being weighed down by, the operationally intensive executions like, sometimes in-room dining would have. So I think some brands are better than others. It's the reason why select service, particularly premium select service, has been very popular is because they offer much more efficient margins. At the same time with, full service operations, it might be a leaner margin, but has a greater potential for price appreciation because it's less susceptible to saturation. So, for example, if you're at the Ritz Carlton, Lake Oconee, for example, they might run at a smaller percentage margin, but they have a bigger base of total revenue, so they're generating more profit. And then an investor that's appealing that a Ritz Carlton like that would appeal to, you're also appealing to like trophy investors and buyers that are willing to invest beyond just financial returns. There might be some strategic or ego return of someone that just wants to own that real estate. So it gets more into, we always say it's an art and a science. And sometimes owning that special real estate, it needs to produce the return, but you might be willing to, take a little bit of a lower going in cap rate because you believe there's more appreciation on the back end, or you feel like your value it's going to be hard to replicate in the market. So you have more pricing power and you can generate more profit in the future. So
Yeah.
does that answer your question? I know
We,
that was,
we, yeah, no, we see a lot of that ego investment in the short-term rental space too, for maybe that trophy asset that you've always want to buy and sort of justify the and lower potential returns on it because you just really want to own that house. You really want to be able to take your friends and family there, and you're willing to accept a slightly lower return for just and the benefit that you get as an investor from owning it.
yeah, and that's a good point. It's like with short-term rentals, there's more utility beyond just the investment potential. So you have to kind of balance both of those, right? It's most of the hotels, like a majority of the investment market is, people that are looking to, market return for their investors. But you do have, high net worth individuals that are buying property, just to, own it for long term or diversification. Like we worked on one hotel in Southern California years ago that a Middle Eastern investor acquired it, and it was a very very low, going in cap rate, and they were planning to invest more, but for them it was a jewel. It was a jewel for their portfolio. They wanted to, add it to their. It was a long term family investment. So it was a totally different motivation, and I think that needs to be a consideration as well when you're thinking about strategy.
Yeah, so I've got a couple more questions from you for you. We're getting towards the end, but I want to maybe throw out a more open ended one for you. Of like you've seen a lot of and hotel investments over the years. You've seen successful ones. You've seen unsuccessful ones. So in general, like when you're looking at people sort of investing for the first time or getting into sort of hotel investment, what are some of the mistakes you see people sort of have when they're doing that first investment?
Yeah, I would say, probably the biggest, maybe I'll answer this in two parts. Number one, I think you need to have a sound strategy or be, self-aware in terms of like, what are you hoping to accomplish? Are you going for a scale aggregation play? And is your business plan hinged on operational synergies because you have a concentration in a particular market? That requires one level of execution. Or are you going for a specialized strategy? And at least being self-aware of what your, aim small, miss small, or know what you want, get what you want. There's a couple of sayings. We have a lot of mantras on our team that we hear and pick up along the way. There's some of these deals, but I think that, like, knowing that on the front end is huge. I think, the real estate transaction, your success is often determined, on the buy, because that basis is marked, that price is set. So it's really, you get kind of one shot at that, and understanding, hey, I've done my homework here. I've studied this. I've looked at a few different sensitivities, both downside, base case and upside. I think, we're covered. I mean, it's hard to predict a, pandemic or something like that. That's just, if you underwrite that for every deal, you're never going to buy anything. But I think not getting over your skis, particularly with debt. I think we've seen that, if you look back at previous cycles, that's usually the people that can weather the cycles. They keep a margin of safety, both personally, professionally. And when it comes to the real estate, you don't want to over lever, because it erodes, leverage amplifies returns. But if, cash flow goes down, it amplifies losses too. And it could be the difference between you owning or, your bank owning an asset. And I think keeping that in balance, sticking to fundamentals of, balance sheet management, that's kind of critical too. Because, you can endure cycles if you have, an appropriate amount of coverage of income to debt. But it's tough to weather a, 1 to 2 year recovery if, you're over leveraged on all your assets.
Yeah. And then the other question I have for you is around like, maybe just the investment space of like, I've always felt like if a deal is going to come up for an opportunity to me, it's already been passed over by the professionals. It's already been passed over by 10, 15, 20 people that have sort of dug in deep, realize it's not a good investment opportunity. And then it gets to me, they're like, okay, if I'm going to say yes, then like I'm the one that didn't see the thing that everyone else caught. So like, and is that a real concern, or is there great opportunities for everyone, even new investors getting in?
Yeah, I think it kind of goes back to what I just said on pricing, right? Like, what is that saying? A man never walks through the same river twice, because it's never the same man and it's never the same river. So I feel like, you can look at opportunities, and there's a lot of ways to structure deals. There's a lot of different price points. We're working on a deal now that an owner, has free and clear of debt, and they're willing to do owner financing. So there's it's been out in the market previously, but this is a new element that changes the dynamics of that deal. So I think, Buffett and a lot of the value investors talk about investing being a zero strike game, where you can look at a lot of pitches. You don't have to swing until you find the pitch that, hits dead center of your strike zone, and then you swing big. And I think that's appropriate here too, where it's, in this environment, like if you're an owner and you're looking for an exit, you might try a couple of different avenues. So I think what buyers need to do, the best ones I've seen is they stay disciplined. They stick to the fundamentals, and, they might find value, and things are changing too, real time with supply and demand. There might be a hotel or short-term rental that's coming off inventory that changes the picture, or there might be new demand coming into a market, like a new convention center is being built across the street from you. That's, being able to have some of that information, or that information asymmetry, is where, investors have been able to find alpha. So I think it goes back to that question, like, do you want to be in the arena? Then you're going to have to get in the batter's box, and you're going to have to look at some pitches. And, I don't want to do a little commercial for on the brokerage side, but if someone's looking to, enter this space and they're new, for us, when we go to our clients, our job is to present them with options and buyers, qualified buyers, and it's to screen that. So if you're a first time buyer, it's going to take some education. You need some preparation. You need to make sure you have your ducks in the row if you're acquiring a branded property or unbranded. And a good broker, a good advisor can be a resource. A great broker can be a force multiplier for you, because the first deal you do, it will tend to become your calling card. People find you for future deals as a result.
And if we're gonna, and maybe leave the audience with like 2 or 3 things of like, and if you want to get started in hotel investment, like what would those things be? Is it like finding a broker that you can start trading with? Is it and talking with your bankers, your finance people, like getting your ducks? Like what are the things you would suggest? Like if there was like tangible, like first, second steps that someone should do to get started in hotel investment?
Yeah, I was thinking about this. So I think first is that self-awareness we talked about, deciding, hey, do you want to go, get in the arena of the professional sports of hospitality investing? And if you're, ready to make that commitment, then arm yourself. You need to decide, size and segment. What's realistically, like, how much capital do you want to commit to this endeavor? But whether that's one property, whether that's multiple, and a lot of these deals, on the private capital side can be raised through friends and family. You might want to test that network beforehand so you don't, get a deal and then fall short on your ability to raise funds for it. So I think taking a realistic view on, what are you approaching? What is the size? What is the segment? What is the space that you want to make your entry point in? Location, which location, which micro location within that market. You'll see that making the box smaller is going to help you stay focused. And then I would also encourage you not to bite off more than you can chew to start, because it's going to be an education process. You're going to learn a lot through operations. You might want to partner with the established operator to learn the nuts and bolts of, what's different about operating a boutique hotel. There's many great operators out there that you can partner with and educate yourself and learn, and then decide which part of the business you want to be on, investing or on the operation side. So, and then after you narrow that down, you'll tend to find, hey, has there been an advisor that's been active? You can, you'll find those opportunities and then use that network to get connected. And you want to see deal flow then. So you want to be plugged in, because some of these deals, we do get approached by clients that say, hey, we don't want to go to, 100 people for this opportunity. It's a special property. We want to keep it a tight list. So then we're tasked with, who do we curate that short list to? And it's got to be prioritized towards those that are serious and ready, willing, and able to, acquire. So to get into that, you need to have that experience. And, like I said, the first deal you do will become your calling card. And so I think it's the work that's done on the front end to get into that. And there's a lot of resources out there. There's a lot of, advisors, there's a lot of literature, there's a lot of information, data. So there's no shortage of that, but it's really, how do you harness it into action? Produces information. You can learn a lot in the classroom, but at the end of the day, you learn the most by doing. So, and a lot of your short-term rental investors have already done it. That's the beauty.
Well, James, this was a ton of fun. I feel like I learned a lot. If people want to reach out to you, what's the best way to do that?
Find me on LinkedIn. You send me an email, or reach out to me through Jamie. I'm accessible, and always looking forward to meeting new people and helping people get into a space that we love, which is the hospitality industry. So this has been fun. Thanks again, Jamie.
Yeah, awesome. Thanks, James. Appreciate you coming on.